I'm Sebastian St. James. Are stock splits hurting your returns? And are stock splits fundamentally bad? In a previous video, one of my viewers said, I was looking at investing into IVV and seeing a huge price drop from December. Have you now? Well, let's take a look. That is IVV, the S&P 500, the Australian version, over 15.1 years. Yep, look at that. The price drop, yes, I can definitely see what the viewer is talking about. So we know IVV has lost a huge amount of its value. I wonder what's caused that. Which Google told me was a stock split 15-to-1 ratio. Now I'm confused. Aha! IVV has undergone a stock split, and now here is proof that stock splits actually hurt your returns. Over the last 15.1 years, the return has been minus 75.9%. Wow, that's dismal. And the CAGR, which is compound annual growth rate, is minus 8.99%. It sort of wiped out all the growth. I am shocked. Can you please explain what stock splits mean to the regular mum investor, please? Praying hands. To the regular mum. Specifically, to the regular mum. I'll see what I can do. This is Chloe. Chloe's a Girl Scout who's selling cookies. Let's face it, having your daughter to sell a truckload of cookies is a headache for the regular mum. Firstly, it's dangerous. Steady on there, little girl. You shouldn't be talking to strangers. Now to the part about stock splits. Chloe has brought home a letter to say she now has to sell twice as many boxes as she was expecting before. Before she had to sell 50 boxes, now, no, she has to sell 100 boxes. Wow, doubling the amount. What an absolute outrage. But Chloe has to do it because Chloe took an oath. Oh, and here it is. On my honour, I will do my best to do my duty to God and my country and to obey the Scout law. Oh, God, she has to do it. The thing is, the boxes of cookies only have half as many cookies in them. So there's been a cookie box split. In front of you is written 2:1, but the way we pronounce that and the way it will help you in the future is 241. Are the Scouts actually raising more money overall? Well, let's do the math. So with the large boxes, what she started with, they were $10 a box and they had 10 cookies in it. $10? $1 a cookie? Chloe, this is price gouging. But now, with a small box, they're $5, right? And they've only got 5 cookies. Oh, they're still $1 a cookie. So before, with the 50 boxes, it's 50 times $10 a box, which equals $500. But now, well, it's 100 boxes, twice as many boxes, but it's only $5, half the price. Oh, it still equals $500. There we go. Is it true that it doesn't really matter how I package these cookies, as long as the number of cookies remains the same? I could have a 5-for-1 box split, or I could have a 50-for-1 box split. It doesn't really matter, as long as the value is untouched. The rest is purely packaging. Well, yes, that's right. Now, if you're not a mum, you would not have understood a word I was just saying there. The question is, why do they actually do stock splits? Is it just to confuse Girl Scouts and their mums? Well, possibly, but they'd never admit to that. This is Warren Buffett. Let's say that you've heard a lot about Warren Buffett and you're very impressed and you think, aha, I will buy some Berkshire Hathaway shares. Well, of course. So you go into the stock market, Berkshire Hathaway Class A shares, yes. Wow, what's this price? $467,000, what, for one share? That is ridiculous. One share. What, does he think you're made of money? Although to a lesser extent, other stocks and ETFs actually end up having the same problem. Let's take a look at IVV. So on the 23rd of November 2022, its stock price was $266. Okay, that's fairly high. Let's say I have $500 and I want to invest it in IVV every month. So how would I go about doing that? All right, $500 of IVV, the price at the moment is $266. Oh, 2 times 266 is $532, but I only got $500 to invest, therefore it's too expensive. I cannot even afford 2 shares. But if I only put 1 share in, it's $266, and what's the rest of the $500 doing? Well, I'm going to have to hold that as cash. Nightmare. So as you can see, the reason why companies actually do stock splits is so they're more affordable for the average person. Oh, I'm sorry, I forgot who this video is for. For the regular mum. So if stocks can split, can they also combine? Well, yes, they can. Hang on a minute. If when you divide them, they're called stock splits, something that's pretty obvious. If you join them, then they should be called stock joins. Is that right? Yes, it is. It makes total logical sense, but nobody calls them that. Here is a 1 for 2, so the smaller number goes first this time, reverse stock split, which is of course a stock join. Previously you had 100 shares at $5, which is at $500. Now for a 1 for 2, so for every 2 shares you're only going to get 1 back, so you get 50 shares, you had 100 before, but the price has now doubled, and you still have $500, that's okay. In the same way that stock splits serve one purpose, which is to make shares more affordable for you, reverse stock splits only have one purpose. What I'm about to reveal to you right now will fill you with terror. So I hope you've got a strong stomach. Be brave. You've been warned about the dangers of penny stocks, but exactly what is a penny stock? Well, here it is. Penny stock is a common stock valued at less than $1 and therefore highly speculative. Is that all it is? Yes. So if your share today is $1 and tomorrow it loses 1 cent, becomes 99 cents, then at that point you now own a penny stock. When that happens, several things will instantly go into place. Number 1, little children will run from you in terror. And secondly, old women will be talking about you behind your back. Actually, I think they may be doing that already. What if there was a way to remove the social stigma of penny stocks? What if there was a way to make you redeemed? Well, now there is. Oh, here it is. It's the 1 for 2 reverse stock split. Aha! So previously you had 100 shares at 99 cents. Oh, penny stock, penny stock. But now, after the reverse stock split, you have 50 shares at $1.98, which still gives you the $99. Oh, look at that. It's no longer a penny stock. So the social stigma is removed. You can now join the rest of society. You will now get your membership at the golf club. In reality, a company is unlikely to take the risk of doing a 1 for 2 reverse stock split. More likely, it'll be a 1 for 5 or 1 for 10 stock split. What this does is it gives them a margin of safety, just in case their share price drops in the future. I mean, just in case their company's actually mismanaged after all. So, if your stocks actually go through a stock split, or a reverse stock split for that matter, what exactly happens? Do you just wake up one day and find you've got half as many shares as you did when you went to bed? Not quite. There is another. A brand new stock code, a secret stock code that you need to know about. Oh, is there? Well, let's take a look at IVV and see for yourself. So IVV, which is the iShares S&P 500 ETF, a 15 for 1 stock split. Right, there it is in writing. The last day of trading with the normal IVV was on the 6th of December 2022, right? The next day, which is the 7th of December, it actually starts anew with a brand new stock code. IVVDB. Wow, how creative. And of course, now you have 15 times as many IVVDB shares as you'd had of IVV. When a stock split or a reverse stock split takes place, they actually temporarily rename the stock code just so that people know there's something going on. Then on the 13th of December, so like a week later, it becomes IVV again. Interesting. So you start off with large IVV shares, they go through the stock split, and now they become small IVV shares. Yeah, just like Girl Scout cookie boxes. Do you know, since my last video, I actually have a new member. Oh, and here he is. Yes, he's got the little M beside his name, Mr. Steve OC. Oh, Mr. Steve OC. I wonder what the OC stands for. Could it be the OC? Well, let's take a look. Misha Barton, Ben McKenzie, Rachel Bilson. No, I don't find any Steve listed here. But still, I can't actually rule it out. So, Mr. Steve OC, thank you very much for becoming a channel member. And if you'd like to become a channel member like Steve and get some of the perks of membership of this channel, and there's quite a few of them, hit the join button below this video. So, in a stock split, we start off with a regular code and then we get a weird code. What happens during the period when I've got that weird code, like for a week? Can I actually sell my stocks under that weird code? And can I buy new stocks under the weird code? Let's say you owned an ETF and it went through a stock split. You still own exactly the same ETF. Nothing's changed. The number of shares have gone up. Temporarily, you've got a new code. But yes, you can do anything with that code as if it's your regular shares. Now, importantly, don't forget to actually go back to your accounting and update the number of shares that you've got for taxation purposes. So, let's say you had a 2 for 1 stock split and you bought 2 shares at $100. But because it's gone through a 2-for-1 stock split, in reality now, if you retrospectively apply it back to when you bought 4 shares at $50. Notice the value remains the same, so the taxman will be very, very happy. But in a sense, you're taking your stock split back to the beginning and pretending they were always that size. That's one way of doing it, or you can just put a little adjustment note if you wish. But when you come to sell your stocks, it does tend to make sense. I now have 2,000 stocks. Oh, I had 2,000 stocks at the beginning too. No, you didn't, but you adjusted it, so you did, and all the math works out. Speaking about going back and making adjustments, I actually have problems with my data, the data of this very ETF, the IVV, and what's happening is the price information is wrong because of the stock split. Here, I'll show you what I mean. And there it is, the S&P 500, the IVV ETF. Over the last 8.2 months, it's gone along, and then suddenly there's a cliff. Oh, well, that's where the stock splits happen. I write my own graphing software, but I'm totally reliant on the data to be accurate from my data providers, and I have several of them. You won't know this. It is a secret, but in my last few videos where I've actually shown the IVV, deliberately I've only taken it up to mid-December because I knew the data after that was wrong. So whenever we compared things with the IVV, we actually only compared it up to mid-December because I was waiting for my data provider to actually realize and provide through the corrected data. But now it's a couple of months later, it still hasn't happened. What do we do about this? Are we stuck with faulty data? Fortunately, I have a superpower. I have the technical abilities to fix this. Let's now peer into the data and find exactly when it's gone wrong. How do we do this? Well, it'll be pretty obvious. The price will be high, and then suddenly the next day it'll be a fraction, it'll be 1/15. So as long as we actually can see the raw data, we can find out the exact date when things went wrong. So here I go. I'm going to list all the data from partway through November until the end of December. I just want to have heaps of data there so we know for sure the exact date. Here it is. It's pretty obvious. The price is really high, goes high, and then suddenly the next day, no, very, very low. Now, we know it's a 15-for-1 stock split. Let's see what data we've actually got in the database to find out what exactly I need to fix. I've got the open price, the high, the low, that's the intraday high and low, the close price, and the volume, which is the number of shares which was actually traded during that day. So, using the table, I'm now going to divide all the different prices by 15 because that's the stock split amount. Oh, the volume has to be multiplied by 15 because the value is the same right across. Let me just grab the date of when the stock price changed. Oh, and there it is. Wow. Oh, but now the price data is to multiple decimal places. Curse you, division by 15. Fear not, I can round this off. I'll take the previous statement, this is an SQL statement, and I'll modify the statement, and well, instead of dividing by 15, we're just going to round it off to 2 decimal places. We're using the data that was now already divided by 15. Let me check. Oh yes, everything looks really good. Beautiful. The data all looks good. However, the proof of the pudding is in the eating. So the way we look at data to find out if it's right or wrong is to graph it. The human brain is amazing. It actually picks out patterns really, really easily. If there's anything wrong with that data, you will see it in the graph immediately. Here's IVV, AU over the 1 year. Oh, look, beautiful. We've got rid of the cliff. All that data actually looks pretty good to me. Let's go back. The full 15.1 years. Oh, beautiful. Oh, hooray. We've fixed it. IVV, no more stock splits, please. It was a nightmare to fix this one up. And my data providers, how dare they not actually provide accurate data? I don't know. I can never have anything nice. Do you know, I can actually predict the outcome of the stock market in 2023. Well, seeing the amount of data I collect on everything, I guess it doesn't really surprise me. But what is going to be happening in 2023? Click here to find out. Or have you seen that? Click here.